Hey everybody, Tatyana Sturm here with the Storck team and Exit Realty Denver Tech Center. We have Mike Ziegler here. Say hi,
Hey,
Mike.
Mike from hi, Mike Ziegler, broker owner, Long Speak Lending. How are you doing?
We are staying inside today. It's kind of a cold, chilly day in Denver.
Yeah, definitely feels like winter.
Finally,
True,
we were on a run of really nice weather there for a minute.
it was a belated fall, that's for sure. Just kept going and going.
hmm I know some people didn't mind it, but we're here to talk about what you can do with the equity in your home. Right now, homeowners are sitting on a lot of equity right now. I actually didn't look up what that number is, but do you happen to know that right off the top of your head?
Yeah, I don't like it was something like I saw a stat just pop in my head and I can look it up real quick, but like only 1.8% of homes in the Colorado market have less than zero in equity. Does that make
Right.
sense? So like it's pretty much everyone has equity in their home at this point. So
I wanted to say like they were saying like an average right now is maybe 150 to 200. I've read that in a couple different places, but that might have been a nationwide stat. I'm not sure.
yeah, I mean a quick search shows that it's like yeah, average is well floats like $182,000 somewhere there.
hmm
Yeah, so
So,
uh,
so if you are sitting on equity in your home, we have a couple different things that we wanted to chat with you about. But something that's been hot topic right now in our industry, and I think in your industry as well, Mike, just because you look at credit all day long, is where Americans are at with their credit card debt.
yeah, hot topic for sure. And I don't know if everyone else watching this video has seen it, but we broke the $1 trillion mark not too long ago in credit card debt, which is an enormous amount of credit card debt.
And I think, I mean, I felt that a lot of Americans or consumers did have their credit card debt under control for a while, but it just seems lately, in the last probably year and a half, just with inflation and the cost of everything going up. I mean, that's where we're seeing it right now is people are putting things on their credit cards.
Absolutely, absolutely.
So I hear a lot of when I'm talking with people, they don't want to give up their interest rates. There's a lot of people out there that are sitting at, between 2, 3% interest rates. And that's why we're seeing a shortage of inventory, first of all.
Sure.
But if you're sitting on a low interest rate with equity in your house, but you have $100,000 in credit card debt, let's just say. I don't think that's probably that uncommon, is it?
No, I think the average consumer has somewhere in the neighborhood right around like $80,000 in revolving credit debt. So credit card debt being that. So
Okay.
it's a pretty big number.
So if somebody's sitting with, let's say, $200,000 equity in their house and $80,000 in credit card debt, can you give us some scenarios on what that looks like based off, let's say, monthly outgoing payment in total versus, okay, if they try to juggle their credit card debt and do their mortgage, what they're looking at versus if they were to combine those two in today's market, which
Yeah,
FYI, the rates have come down a bit.
they have, and this is actually it's funny. I put this together and to use actually for a client presentation. If you wouldn't mind, I don't know how to share. To share the uh, yeah, that one. Cool. So I've got this cool tool that I use, and I can do it for anyone, no obligation if they shoot me an email or whatnot. But I can put together their current monthly payments, and then they're showing everything, their current housing, and then showing like what a hypothetical might look like. And really that it walks through the differences, but it also walks through like as because I fancy myself more of a long term financial planner to help them as well. Like what would happen if they continue to pay down their mortgage based on what they're comfortable with paying or have been paying. Um, long story short, this is obviously you can see the current on the left and the proposed on the right. This is just showing off what it would look like to pay off some debts, and it's not a huge amount. This is certainly something that a lot of people have, but you can see here on that payment overview on the right that these people have about $2,000 a month in current revolving credit card minimum payments. So in
Mm-hmm.
turn, they've got this about $5,100 that they're having to cover every month. And then as I wander through this scenario, and again, each can be specific to everyone, I can show off, what that savings looks like refinancing the loan. And this is taking them from a 3.25% rate, which is pretty average for the time of when people did the refinances during the COVID boom, and then taking them over to a 6.75 rate with very little cost on that one, and reducing their total debt by about $104,000, which again, is paying off kind of the average American here, right, with their Visa, their Mastercard, their Discovers, a Macy's card, because why not?
Right.
And then
Right.
that vehicle loan that maybe they purchased with a higher interest rate. And so, as you can see, that monthly savings, even with that higher interest rate, it's about a little over $1,600. But again, because finances are kind of my world, right? As I look at that and extrapolate things out over 5 years, over 10 years, and I really show off what that looks like, really after 30 years, if you continue to make, the payments that would have made versus what you are making, and putting that into your savings, and it's $735,000 better to you by chasing this and going with the debt consolidation. Again, I can explain this to each client a little more in depth, but it just shows that making a smarter move, getting out of debt, stop paying those minimum payments, and really put your money to work for you, really pays off in the long run, even with that rate that's quite literally double what they might be at right now.
And the other thing too that I'm just going to add into this, because I've had this scenario happen with our buyers, just of course, getting people into houses, being creative, thinking outside of the box is important in our industry. But, also upgrading in a house. If you're sitting on a fair amount of equity, and especially can get into a house, let's say not using all that equity, but doing, let's say, a 20% down, and then taking that other money and paying off things like credit cards or cars or maybe a boat or something like that, and paying those off, you can come out ahead in that situation as well, correct?
Absolutely, absolutely. And again, I can run those numbers for anyone just to show what that would look like, with that new house, that new payment, but by paying off that revolving debt, or that ancillary debt, what that would do for them, and really help them in the long run.
And sometimes that can even boost your credit score and
Absolutely,
possibly get you in
absolutely.
a better program too, right?
100% get them in a better program, or just really help their purchasing power, right? Stretch their dollar a little further by using some of that equity to pay off debts that are unnecessary. So
All right, and we're going to go into this next slide, okay? Is that
cool.
okay? Okay, cool. All right.
Oh yeah. So this is just, I mean, you were talking about it earlier, and I just threw these together, same kind of thing, just really talking about the credit card debt in the US. And to your point, right, I really feel like we were in a decent spot, as 2016, 2017, 2018 hit. And then obviously things got a little weird during the COVID, but people obviously paid it off when they weren't out spending, right? When everyone was at home, or being a little more conscientious of what they were spending their dollars on. And that worked for a couple of years, but as you can see between, you know, 2021 and 2023, it has absolutely
Oh yeah.
ballooned, which is, you know, it's unfortunate, but that's kind of the way it, the way it's going right now. And then, you know, I don't know. I really feel like we could be in a tough spot unless people get this under wraps a little bit better here. So hopefully people do take advice and either look at what a cash out will do for them, or selling, right, like sell and buy something different and use that equity to get yourself in a better financial position.
Mm-hmm. um, so we're going to move into a little bit different conversation about other things, using your equity in your house for other things. But tell me a little bit right now in terms of products that you have. Let's say if somebody, and I don't know what these ratios are or loan to debt value, but if somebody has a lower rate, and let's just have maybe they have 50% equity in their house or something like that. Are there products out there right now that they could do, like a line of credit or a second, if they wanted to do some home improvements on their house?
There are, and actually, there's a lot of them that have come into fruition in the last year or so because of the low primary rates. And the secondary lenders who do the HELOCs or the HE loans, which is more of a fixed 30-year product, they are smart and they realize that they need to may have very sharp pricing and very good rates to attract people over. They can't be as high as they used to be. But I have products all the way from a 5-day HELOC that we can, if you're really in a tight pinch or you need to get something done quickly, we can do it as little as 5 days. All the way to really your more traditional HELOC that will take a little while longer for the underwriting process, but all of them have very advantageous rates. All of them are way better than what credit card or personal loan rates are looking like right now. And all of them, obviously, tapping that equity in your home that right now is free money for a lot of people, really can get put to use to some great home improvement projects, which I know is right up your alley.
Yes, yeah. So I love this report. It comes out every year. Obviously, 2023 is not out yet, but it's a cost versus value report, and it breaks it down into national average, mountain region, and of course, even further down into the city. Return on investment. But basically, you can see going down the list here that there are these are what's considered by this cost versus value report the highest return on investment for the projects that you can do on your home. Now, most of the time, you're not going to get 100% return on your investment when you're putting money into your house, but it is good to be smart and do the things that you are going to get the most return on, especially if you think you're going to be selling in the near future. But I just tagged red lines by the ones that are bringing the highest return on investments. A bathroom remodel, just something that's very standard. You can get 68% return on your investment. I marked this minor kitchen remodel, which I personally love doing for my sellers through my home enhance process. But I do this all the time. I mean, it's showing here 80% return on investment. But when I do with my sellers, of course, that increases sellability. But I would consider a minor kitchen remodel like painting the cabinets, adding hardware, switching out lighting, potentially maybe switching out flooring or countertops, but keeping that investment like $10,000 or less. So you can get a huge return on investment on that. Deck additions, again, very large return on investment, over 70%. And then things that a lot of people don't think about or tend to people put off until the very end, until like, oh my gosh, I have to do this. But a lot of the outdoor things, outside of your house have a huge return on investment, such as garage door replacements, window replacements, siding, adding new stone to the exterior of your home. So those are just things to think about, because I think a lot of times people think about the improvements on the inside, but the exterior is really important, and mechanical is very important as well, like a furnace, hot water heater. Maybe you want to go tankless on your water heater, that sort of thing. So
Absolutely. That's a great list. And one thing that wasn't on there that shocked me was basements, right? Like adding that extra bedroom or bathroom, which I know is right up your alley as well. So all things that equity would just do amazing things for your property.
yes, and it's the thing about basements is we all know the cost of everything has gone up, right?
Yeah.
So I mean, typically what I see right now on basements remodels is it's coming back about a 50% return on investment right now, based off
Right.
cost of materials, cost of labor. So if somebody were to come to me and say, hey, should I finish my basement to sell my house? The answer would be no. You would want to finish your basement so that you and your family could enjoy it, have that extra space, that extra bedroom, extra bathroom, maybe a theater area. You would definitely get the, increase on your home's value for having a finished basement. But as it sits like today, it's not one of the highest return on
Yeah. Don't
investment.
do it to sell for sure, but just as a fun, for those looking for their man cave, right? An easy way to spend some of that hard earned appreciation.
Right. If you have the equity and you need the space, you will get the return, but it's not dollar for dollar right now,
Absolutely.
anyways. Unless you do the work yourself.
Yeah, well, don't let me do the work for you. So
All right. Well,
uh,
we hope that this information was helpful for you. If you have any questions, if you want to Have Mike do one of those worksheets for you to see if consolidating your credit card debt would be helpful for you to add more just cash flow to your monthly income, or if you have any questions about home improvements. For those that don't know me, I've rehabbed over 200 properties in the last 25 years. I've been doing real estate. Actually, I'm doing 2 right now. So I have contractors for everything. I love designing, and I'm happy to meet with you and take a look at your home project as well.
Might have to take you up on that, Todd. I got some ideas cooking. So
All right. Well, and get your new garage door. It was the
yeah,
highest
there
one
you
on
go. That was the highest. I was shocked. I'm gonna go tell the wife right now. So
there. All right. We'll talk to you later.
have a great one.
Bye.